Hello, and on this episode of the Mortgage and Protection Podcast, Paulie's back from Henchurch Lane to explain how getting an HMO mortgage through a limited company works. It's great to chat with you again, Paul. How's it all going?
Hi Tessa, yeah, good, thank you. How are you?
Good, good. Yes, all good too. Thank you. So, more questions here. Let's get straight into them. So, first of all, of course, people would like to know, can I get an HMO mortgage through my limited company? How does it work?
Yeah, you certainly can. You can buy a HMO through a limited company, and it's actually becoming increasingly popular for landlords, and that's due to quite a lot of tax benefits. Because the process is more, or let's say slightly more, that's not fair. The process is more complex than if
Mm.
you were to buy it in your personal names, and there are a fewer lenders that are sort of at your disposal. So it is more time consuming, and it is more costly. Um, but you can. So,
Mm.
hopefully this podcast explains to people why they would have all of those things stacking up against them, and look to buy property through a limited company versus personally. I'm sure we can go through the motions and get people on the right side of the fence with it.
Yes, definitely. We'll go into more detail as we go along all of the questions, but this next one follows on really. So, what criteria does a limited company need to meet to be eligible for an HMO mortgage?
Okay, so you're usually going to purchase property within a limited company with something called an SPV. So that stands for a special purpose vehicle. You're going to need to register at that company's house, so very similar to any other limited company. You're going to need to have the right SIC codes, SIC codes. Okay, so there's two that are very important that you have at least one of them. It's 68100. So that is the buying and the selling of your own real estate. And the second code is 68209, letting and operating of leased real estate. Okay, so they're the two SIC codes they need to have listed on the limited company that you open up with Companies House. You're also going to need to have a personal credit score, which is going to be at a level of good at least. Um, a lot of people think, if I open up a limited company because I've got bad credit, I can buy a property through there
Mm.
and I'm okay. That's not the case. You will be, you will have a credit check personally as well. So some lenders are going to have a minimal income requirement on top of that. Common one's going to be about £25,000 per annum. And each lender is going to have their own sort of personal property criteria. And that's going to be very similar to any other type of application when you look to buy property. And it's going to differ from lender to lender. So obviously make sure you do your research. And most lenders are going to request that you have your own residential property in the background too. So
Mm.
that's going to be quite a common criteria. And I say most of them, all of them are going to need you to have some sort of personal guarantee in the background as well. Because if you open up a limited company, again, it won't have any credit history. It's not a trading company. They're going to be looking to have some sorts of personal guarantees from the person who is the director of that limited company.
Mm. Right, okay. So, lots to bear in mind there, lots of
Yeah, I felt
points.
like I rambled on a bit there. Is that really boring to listen to?
I mean, it's kind of like a checklist, isn't it? I
Yeah.
think it's probably good to be clear like you have been. So hopefully not. Hopefully it's useful more than anything, but there we go. Shall we move on then? Shall we look at the next
Sure.
question? Okay, so we always get this one, but in this case, how much deposit does a limited company need for an HMO mortgage?
Okay, this one's a little bit more straightforward. You're usually going to need a minimum deposit of 25%, but because the maximum loan size is going to be driven by the potential rental that you're going to get from that property, generally you're going to need maybe a little bit more. So minimum 25%, could be 30, could be 35, depending on the actual property and its rental yield.
Hmm. Right, okay, there we go. That was a nice and easy question there, wasn't it? I think.
Mhm.
So moving on to this one then. Can I get an HMO mortgage under a limited company as a first-time landlord?
Yes, you can. I'd say you're going to be dealing with fewer lenders from the whole market. I can think of a few off the top of my head. Um, so it's worth bearing in mind that there'll be a limited pool of lenders for people that are first-time landlords, and that brings with it other difficulties because as soon as you add in, things like criteria in the background and affordability, it can really sort of pigeonhole you into maybe one or two lenders, and that might not be the most competitive option that's
Hmm.
available for you. But yes, you can buy HMO property through a limited company as a first-time landlord.
Okay, well, that's good news. If we've got any first-time landlords watching this, listening to this episode, there we go. So let's look at this question. You might have touched on this slightly actually earlier on. So, what if the limited company has poor credit? Could I still get an HMO mortgage?
Yeah, so any mortgage applications that you put in, regardless as to who owns them, it's going to be the applicant that's being stressed, the person who is the 100% director or who is the person buying it in personal names. So 99 times out of 100, when someone buys a property via a limited company, it's going to be via this SPV, this special purpose vehicle. Okay, that's not a trading company. It's not going to have history. It's not going to have credit. And because of that, it will be the 100% director or a number of directors that are stressed and that are credit checked. So that's worth
Mm,
bearing in mind. But if credit is always going to be an important factor, and we should all be striving towards having a good credit score in the background anyway. So yeah,
mm.
bear that in mind.
Okay, yes, a key pointer there. Well, we're getting through these questions now, four left. So moving on, let's look at this one. Can I remortgage my HMO properties into a limited company? And how does this work?
Okay. So you can't remortgage them into a limited company, no. So a lot of people think because they own the limited company and they own the property, it's just remortgaging. It's not quite like that. It's a separate entity altogether. So actually, you're going to need to sell them from your personal names into the limited company. The limited company will buy them off of you from your personal name. It sounds a little bit more complicated than it is. You can do it, but because it's a sale, you will incur stamp duty on that transfer. So worth bearing that in mind. Still
Mm.
can be worth your time. Obviously, sit down with a broker and crunch the numbers, but it is a sale, not a remortgage.
Right, okay. So that's clear there, hopefully. With all that in mind, let's move on to the next two questions combined. So, in your opinion, is it worth buying an HMO property? And what are the pros and cons of an HMO mortgage through a limited company, if that all makes sense there?
So yeah, in my opinion, it's definitely worth buying HMO property. If you're going to buy it, it's my strong opinion that it's generally going to be a better idea for you to buy it through a limited company, and most of the benefits of that are going to be related to tax efficiency, really.
Mm,
But as a result of being more tax efficient, you can grow and scale that property portfolio or that business much quicker. So if you're not in it for profit, like most people are, um, let's rephrase that. You're probably in it for profit because it's a business. So I'd say the pros, i.e., profitability, probably outweigh the cons, right? So
mm,
the drawbacks are mostly going to be one of two things: upfront cost, because it's going to cost you more initially, but again, it's going to be worthwhile long term. And your cost your time in a cost related sense, that it's going to be more time costly for you.
mm,
Doing anything through a limited company is going to take that little bit more administration than it would if you were to do it in your personal names. But we've got to speculate to accumulate in these
mm,
situations, and I think having that sort of additional profit is always going to outweigh the cons there.
mm.
So yeah, in my opinion, if you're ever going to be in a higher rate tax bracket, if you include the rental income you're getting from that purchase, if that's ever going to bump you up to the higher rate tax bracket, there's not really much of an argument that it's going to be more beneficial to buy it through a limited company.
Mm. Okay, well, there we go. Great answer there, I think. Brilliant. And actually, with all that in mind, it leads us nicely on to the next two questions combined. So, are HMO mortgages more expensive for a limited company? What costs are involved with an HMO mortgage? So, what do we need to know here specifically?
Yeah. So as I touched on before, upfront
Mm,
costs are definitely going to be more when you do anything via a limited company. But I think it's always going to be worth it in the long run. Costs that are, normally incurred across the board, really. There's a couple of little nuances when it comes to limited companies, but generally it's going to be the same sort of costs and fees and associated expenses from a normal purchase, right? So we've got the
mm,
stamp duty. You're going to get hit with a surcharge because it is an investment property. So
mm,
that's always going to be the case. You're going to have broker fees if you instruct a broker. You're going to have solicitor fees because you'll need legal work, a valuation cost. So So the lender will charge you to go out and value the property, and they are likely to have mortgage product fees on top of the product that they offer you as well. Um, and then one additional that you might not always get with a standard purchase is independent legal advice. You will need to pay for that, but
Mm,
it's quite a small cost. We'd probably be able to secure that sort of cost around the £300 or £400 mark.
mm.
But that's something that you need to do on top of what you would do if you bought in your personal names.
Okay, well, thank you for the breakdown of costs there. Always useful to know. And then just lastly, really, how do I get an HMO mortgage as a limited company? What's the process and how can a mortgage broker like Henchurch Lane help?
Okay, so let's go through the step by step bit just to give everyone a bit of a rundown. So number one, you're going to need to set up that limited company and make sure you use the right SIC codes that we mentioned before. So that's 68100 and 68209. Set up number two, set up a bank account in the limited company name for all of your expenses and your income. Number three, get your docs in order. So you're going to need to have things to hand like identification, bank statements, and income proofs. Number four is when I would suggest speaking to a broker if you haven't already. At this point, I would suggest definitely getting someone involved that knows where to go because this is when you're going to start to look for the lender. Um, Whatever you look to spend on a broker, by the way, is going to be saved tenfold in other costs. So definitely worthwhile when it comes to these kind of complex cases. But they're in additional, they're going to help you to put together all the additional documentation that a lender is going to require from you from a limited company purchase. So that's a business plan, a property schedule, personal guarantees that we touched on before,
Mm,
all things like that. And then lastly, they'll look to submit the application for you once you've decided on the lender and obviously a solicitor to carry out the legal work in tandem with the application with a view to exchange and complete on your new purchase. Once you've got that, then all the fun begins with getting your tenants and the renovation requirements and things like that.
mm.
But that's a sort of basic standard process, step by step. If you follow that, you're going to be saving yourselves a lot of time by going back and forth in between each step.
Brilliant. There we go. You summed that up well. All really clear. A great
Done it
note to
before.
end on. There we go. A lot of practice.
Not my first day.
There we go. Well, thank you for that as always.
You're
Hopefully
welcome.
that proved useful to anyone listening to this, watching this. And I'm sure we'll be back with another episode very soon.
Great. Thank you for your time, Tessa. Take care.
Thank you. Bye.